give your take on, how much do we read into just how awful it has been in the markets here? I mean,
I think it's a good omen that it gets all of this out of its system at the beginning. And remember, you don't just got oil, you don't just have China. You've got monetary policy where people don't know which way it's going to go and equally argue either way is wrong. Then you've got a pretty strong conviction that a recession is about to happen. And I've left out maybe the most important thing.
What's your probability?
Most important thing, there's not a presidential candidate out there that says anything good for business. They won't even touch the subject.
Mm-hmm. But what is your prediction for? I mean, are you betting on a recession for this year?
Absolutely
What's
not.
your outlook?
I think it's very far out.
Okay.
Very far out.
Well, Michael, let me give you a quote. We had Tom Lee from Fundstrat Global Advisors on about an hour ago. His prediction for the S&P 500 over the course of the next year is that it will close out 2016 at 2325. Fantasy?
I think that's pretty aggressive. I think you need one of two things to happen, or maybe both. You certainly need much stronger earnings growth. Given the current macroeconomic backdrop and the way the data's coming through, I don't see that. Or you need a lot of multiple expansion. And that's generally been driven recently by quantitative ease. And the Fed has turned off the spigot there. So, I don't see a recession. I think it's remote. I agree with Robert. I see equities can go up from here, but 2,300 is pretty aggressive.
That's pushing it a bit. Yeah, this is a tough year. We got to shake all this stuff off.
But in her press conference, one of the things that Janet Yellen said was expansions don't die of old age, right? There's nothing that is going to make this stop. What might kill it off if not old age?
Monetary tightening, if it was really tightening. This is not tightening. This is getting the foot closer to the brake pedal. There's really nothing out there unless we have an ongoing rollover of this commodity crisis. Mm-hmm. Right now, I'm kind of happy the U.S. and Europe are at the engine level and running the economy. Mm-hmm. I don't want to count on the emerging markets. The problem with oil, the problem with commodities, all the bad stuff is kind of shaking around the emerging market world. If that actually does spin out of control and infect the rest of the global economy, that would be a big problem.
So do you see, though, that maybe the engine, that monetary policy engine, could continue to run here, right? I mean, Gary Shilling was on earlier who said, look, there's a possibility that the Fed may raise rates and then have to cut them.
I have a very simple answer, and I've always believed this monetary policy is a fabulous brake when you need it. It is not a good accelerator. Fiscal policy is the accelerator. I don't think anything the Fed ultimately does this year, within reason, up or down, is really going to change where we're going to be at the end of the year. I think it's other factors.